High-risk investment. Trading on margin carries a high level of risk and may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with trading and seek advice from an independent financial advisor if you have any doubts. Market opinions. Any opinions, news, research, analyses, prices, or other information contained on this video is provided as general market commentary and does not constitute investment advice. MasterTheMarkets will not accept liability for any loss or damage, including without limitation to any loss of profit, which may arise directly or indirectly from use of or reliance on such information.
Hi traders, welcome to our live trading workshop. It's still not on here. Founder of MasterTheMarkets Elite Trades Conference in the Traders Open Day. So very quickly, what we're going to be doing is today's topic is going to be on Fibonacci retracement on stocks. So what are we going to be taking a look over here? Now I've got the Bitcoin. Let me just bring up a stock. So today is on stocks, but I'll show you that actually what we're going to be teaching you can actually be applied on actually any instrument at all. Okay. Now, today I'm just going to be covering the main principles. Some of you are joining in for the first time or beginners, not sure about terminologies or whatsoever. You can always go to our 7stepstoctp.com website over here. And we got some free video series over here for you guys to learn from that you can then start to take a look at. Once you got a name, email, and your number, if you want to put it in, and then you will get the 7-part video series, which will look something like this, and then you can take your own time to watch it at your own free time. Okay, and you can also keep up to date with all our events and stuff that's happening with us. This will give you a good detailed explanation of what we're going to go through today, and also our YouTube channel. Highly recommend you guys to subscribe to that and hit the all bell icon so that every time we go live, it will come onto your phone. Okay, people really like that. I'm really finding it very, very useful because we've got amazing content there. We've interviewed top market visits like Tom Barso, SDA Talks, and David Paul, and so on and so forth, and Ninja Traders. So much of good quality information for you all. Now, without further ado, let me just keep going back to here. So today's video, what we're going to be covering, I'm going to be covering the Fibonacci retracement, as I said, on stocks, but I'll show you can actually apply it on any instruments. And also the other thing that we're also going to be looking at also is our live trading positions setting up for today, for intraday, okay? For those of you getting ready for the US session. Right, so with that said, let me just take a look at here. What I've got here, I've got the SMI, Smart Money Indicator, which is bespoke to us, MasterTheMarkets, with the bottoms and tops quantified. So we talk a lot about that at 7 Steps to CTP, as I mentioned. You can get a copy of the videos, okay? Now, on that, all it's here is when you get an orange arrow and an orange dot, that's our top confirmed, and then the blue arrow and the blue dot is when the bottom gets confirmed, okay? By doing that, we got a framework, and by that, then we can get 4 main critical information, which is what is your trend, what is your phase, and then we also get the 3 stats information as well. How much move is left, how much it goes against you, and the time too, okay? Now, after that, you've got your framework and the 4 stats. Now, anything can be piled on top of that, including Fibonacci, okay? So, for example, now, if I start to take a look at Tesla stock over here, and I'll do that on every other stock, let me just hide the other indicators. We've got the volume over here as well by Trade Guided team, by Gavin Holmes and his team as well. I'll show that in a minute on how we can apply the volume. We do a lot of webinars along with them too. So if you take a look over here on the most recent one that is happening here, okay, this was in an uptrend, right? So let me just move my window up. You can see at the moment, if I just connect the arrows together, right, that's in an uptrend, isn't it? And then that is retracing back, and that is a uptrend phase 2, okay, before it turns into a phase 1, and that's what we want to capture, the phase 1, which is in alignment with the trend, okay? Now, the thing is, how much does this phase 2 retrace? And that's when Fibonacci's come into play, okay? And we've done a little bit of research on that. So how do you draw your Fibonacci points? Now, the important thing you got to understand here is that for any Fibonacci point, you need a low and a high, right? You need a low and a high. Now, let me explain that to you guys. So if you think about it, if I'm waiting for that phase 2 to finish to come into a phase 1, I need a low and a high, isn't it? To then decide or to define what is my 0 and 100% point, okay? From there, then I'm seeing in relation to this swing, how much is it retracing? And that's exactly what we have done over here, okay? But here's the most important point, traders. Now, if you do not have your swing low and your swing high or your bottoms and tops quantified, then the whole thing becomes subjective, is it not? So here, for example, let me just delete that one. If I were to hide the SMI over here, let's say, now if you want to draw your Fibonacci's, right? So some people might say, you know what, that's actually the bottom. Let me draw it from here. I don't think that's a top. Let me draw it all the way to the top over here, okay? To the top, and that's what I will call my top over here. And then they draw it like that, and then they get their Fibonacci levels. What are they saying? Basically, that's my bottom, that's my top, that's my 100%, and from there, then I get my retracements. Whereas some other people in the classroom of 1,000 people, let's say, might say, no, I don't agree with that. I think the top is actually over here. Then after that, if I want to measure the retracement over here, this part here, then I would then do it accordingly. Then I would do it from here to here. So there's many Fibonacci's they will draw in between. Now, as for today, if they were to start to take a look, they might say, this is my low. I will start to take a retracement from this particular point, okay? Now, if I were to go into lower time frames, it gets even more confusing, is it not, traders? So if I now pull it down all the way to 1 hour, then if you start to now draw your Fibonacci's in, now this is a very good example here, what we are having. So over here, as it's pulling up over here, you might say that, hey, you know what, traders, over here, I am seeing that's my low, that's my high over there, right? And over here, I'm starting to see my Fibonacci retracement pullback. Now, some people might say, no, I don't believe that that is actually the low and the high. I believe that there is a low and a high probably around here, which I will start to take a Fibonacci point from. So the whole thing is what I'm looking to say, for Fibonacci retracements, if you do not have your tops and bottoms quantified, whatever they might be, right? If you do not define what a top and a bottom is and start to have a framework, it's not the holy grail, but it's a framework, then the whole thing becomes very subjective, very doubtful, low confidence, you know, your strategies are not robust and validated, and all of that stuff, okay? However, if I start to put the smart money indicator over here, I can now see with conviction, according to this framework, where the retracements are and how much is retracing or where to start to take a position from, okay? So for example, here, I know that's the bottom with conviction, according to our quantification, and then over here, I can start to take a look at the Fibonacci retracements, okay? Right, so this is what we got at the moment in terms of Tesla. Now, how do you use this Fibonacci retracements before I go on to the live trading positions? I'll just give you some guidelines how we can use it. The first thing how you can use it is, you can use it on a single time frame. You can use it on a single time frame. The single time frame would be, I would say as a starting point, start from a trend and a phase. So if it's an uptrend, right? If it's an uptrend, only look to see the retracements of the phase 2 and when it will start to bounce up again, okay? So that's the first thing I would say. And I would say at least wait for a certain level of Fibonacci retracement. So let me take a look at the other stocks, see if I can find something in real time that is happening over here. That is actually in a downtrend over here. Maybe I can look at some maybe lower time frames. Let me see if I can find something. Apple has bounced off as well. I will start to take a look at Amazon. I'm starting to take, I wanted to show you one which has got, example, let me see if I can find an uptrend was more easier, or we can use this one here on Nvidia. Let me start maybe using the weekly one. Okay, but the principles can be applied to anything. So this is a good one here. So let me see this one then. So let me hide the rest. So to give you some principles on what we are looking at, so let me actually clean all this up. Right, so, and let me just hide that one as well. And a bit more cleaner. I can delete all that off. It's a bit more cleaner. There we go. So let me just pull all this down a little bit. There we go. Right. So now, as you can see, it's quite clear on NVIDIA that at the moment we are having a uptrend over here. As you can see, if I just connect the arrows up together with our framework that we got, you can see that's a higher high at the moment, right? Then you can see that there's a small retracement here. What we would do first is, according to this framework, if you observe, we will wait for the top to confirm. When the top confirms, this phase 1 will turn into a phase 2, okay? A counter trend move in an uptrend. After that gets confirmed by an orange arrow and an orange dot, then after that, we will start to draw our Fibonacci lines. What is our objective? Is when that phase 2 turns into a phase 1 is what we are looking for. And what I will give you as a guideline from the 15 years of research that we have done on various studies and indicators and all that, and that's why we invited to lecture on the Society of Technical Analysis training program as well for automated training programs. We'll be sharing all of this in the new year, is once the top gets confirmed, let's say this potential top at the moment gets confirmed to a confirmed top with an orange arrow and an orange dot, then what I will look for, at least for the 38.2% level to cross. After that point, if it's 38.2% crossed, we have seen about 60-70% of them will start to turn around into the phase 1 move. Now, to time yourself, okay, to time yourself where we're going to enter that, of course, we don't enter exactly on 38.2, but to time ourselves when that turns, then we can use what we talk about in different time frame correlations of the ripple, swell, and wave concept. We talk a lot about that in the 7 steps to CTP, and that's what I had mentioned over here. Okay, 7 steps to CTP.com. Watch those videos, really will help you in whichever strategy that you're doing, okay? Because it's a framework that is flexible and fluid. Right, now with that said, let me just take a look on the lower time frames. However, if you want to take another position, let me just go on to the 1 hour. Always follow with the trend, what we have. So let me just say if I went on to the 1 hour, and I can do this on any other time frame at the moment. Over here, we got actually a downtrend, phase 2. Over here, if you believe that it's going to come back in its downtrend, according to your strategy rules, you got to formulate that. Then what you then do is you draw your Fibonacci point, okay, your Fibonacci point over here. And around here, you can see that it's at least crossed to 38.2. So wait for at least 50 or 61.8 before it starts to turn around. If you want to enter earlier, you want to start to time yourself to enter earlier and not wait for the orange dot to appear, then look at the lower time frames, okay? So these are ways that you can use the Fibonacci retracements. Now, remember that whatever it is, it doesn't matter whether it's stocks or not, right? Which is what I mentioned, yeah? You can do this on anything. You can do this on crypto as well. You can do this on currencies. You can do this on commodities. It really doesn't matter, okay? And then on top of this, to make our probability stronger, we always can take a look at volume, which we do a lot on webinars with Trade Guider and the Gavin Holmes team, okay? So over here on the Bitcoin, again, as you can see, if I were to use, let's say, replay mode over here on one of these retracements over here, as you can see, even when it was in an uptrend over there, you can see that over here, if I were to draw that over, you can see this cross the 38.2% level. Start to time yourself and then use your next rules to start to see when you want to enter into that, okay? So those are the things you can do, but I can do that with conviction because we got our bottoms and tops quantified with our framework, and that's what the Smart Money Indicator gives you, and you can pile anything on top of that. So it's quite a fluid system. It's not a rigid system. It gives you a solid framework for you to start following from, which is actually market structure in essence, okay? Good. Now that I've given you the good idea about using the Fibonacci's on different commodities and instruments, just taking a look at XRP was a bit interesting to take a look at. It's really on a shoot up at the moment, isn't it? It's about $3. We've been holding on to this for quite a few years now in an investment portfolio. Again, the Fibonacci thing, you can start to take a look at it. Same thing again, right? Over here, right now, once it confirms that top, you can start to see, you can draw your Fibonacci points again, right? Over here, yeah. So the same principle applies to anything, okay? It's just not to only certain instruments and stocks. Commodities, you can do the same as well. Good. Guess I've drilled the point through over here. Now let's take a look at some live positions that is happening at the moment for intraday purposes on the stretch principle, right? So I've talked a lot about the stretch principle. Some of you do ask me, okay, what is this stretch? Why are you talking about Tiro? Sometimes when I follow you on the YouTube live webinar that you're doing, or live stream that you're doing, I find it hard to understand it. So what you can do is you can go on the YouTube channel, youtube.com/MasterTheMarkets. And what you can do is over there, the boys, even on our homepage, right, very straightforward. You don't need to go even under playlist, but under the homepage, you can go under must watch, the row, and go and look at this one here, stretch principle. Okay, there's 5 videos over there for you. Then you can use it. And if you use the stretch principle in combination, okay, with the 7 steps, it becomes very powerful. Okay, which is what I'll show you right now. Right, now with that, let me go on to this one here. Now let's take a look at a few trades that might be setting up. I did take a look at some of them. Over here, the first thing I look at is something clean, which is I got an upper stretch line being breached and then the lower stretch line being breached as well. Usually I like to only have only one of them being breached. It's a bit more cleaner. But the latest one you can take as well. I'll just look at some straightforward setups for now, okay? Just to see if there's anything straightforward that is popping up. Euro dollar is a bit more cleaner. The lower stretch got taken out, so I'll keep that in mind, right? And in terms of trend as well, is a downtrend phase 1. It just took that out as well. So downtrend phase 1, lower stretch being taken out over here as well, even though the upper stretch also got taken out. But just by a little bit, it's a false breakout over there. And then the other thing, what you also got is on the daily time frame, you got a downtrend, but it's a phase 2. Okay, so there's no direction alignment, but there's trend alignment. Okay, so the only thing that is not going for it is this direction alignment of the daily. But let's see if the lower time frame is able to push that higher time frame down towards a phase 1. Okay, let's take a look at that and see if it does do that. So this euro dollar is a good one to look at today. Possible entry points is at the break of that low, as is doing it at the moment. Okay, and then I will start to take a look at the range levels as well. Okay, remember all these things I'm telling you, you can even do it on the London breakout as well at about 7-8 a.m., which is what some of our traders and clients do. Or you can do it for the US session. But remember, everything got the pros and cons, because if you do it later, you might miss some moves, right? Or if you do it at the US session, you might wait for some stops to be cleared out before you start to take your positions through. Right, so here I'll put, that's a possible stop that we can start to take a look at. Where do we start to take a look to get out? I'll take a look at the ATR. It's about 98. You can read it from here. We've done many videos on this. So 98, 0.8. I usually take 80% of the ATR range. So that would be about 80 pips, right? So 80 pips, let me just start to take a look. 80 pips target is about 1.0448, okay? That's what we got over here. Yeah, so that one there. I'll put that as green. Brilliant, okay? So we got that one there. Now we go on to gold. Now, gold over here, again, taken out the upper stretch and lower stretch, and then it's coming back up again. It's a bit messy at the moment. What's a downtrend is what it's got. And it's got downtrend over here as well. Has it got trend alignment over here? Yes, it's got the trend alignment as it's broken the lower stretch, and it's also has got this one, just that it doesn't have a direction alignment here. It's being a bit choppy over here, isn't it? So something to be aware of. If I were to consider gold to on the short side, firstly, I'll combine that volume, even euro dollar, I'll combine it with volume at, very soon, very shortly. But even if the gold, I'll look for some kind of reversal rather than jumping into the green bar over here. And that would be somewhat my entry point for it to come back and take out that low once again to tell me that this buyer bar was actually a fake. I'll start to take a look at volume very shortly as well. And in terms of the 15-minute over here, it's turned into an uptrend. So I'll wait for some kind of a low break or a top confirmation to turn this into a downtrend before I start to take any positions on this. Okay, so I will wait for that trend alignment before jumping into that. DAX, I know some of you guys are good DAX traders. You can see the same thing happened over here as well. So those of you who follow the same principles, you can see that upper stretch got taken out, much more cleaner, isn't it? This one, yeah. Upper stretch got taken out. It's an uptrend as well. There's direction alignment here on the 1 hour, as well as if you take a look, this is what perfect chart over here. And then we got direction alignment and trend alignment with the higher time frame. So this is a tick, 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 right? This is what I say. When you take a look at it, it's money lying on the table. So why are we always looking and forcing a trade on a certain instrument when it's not showing itself that clearly, okay? Somewhere else, some other instrument might be much more cleaner, simpler for us to trade on. So this was a really good one. What time did that happen? That happened at about 7:30 our time. 7:30 to 8:30 is when that happened. Possible entry point could have been for the break of that as it turned into an uptrend, or wait for the close over there, or on a lower time frame you could have got into that. Now, on where would the possible target point be if it's a range capture based strategy? Then the ATR 10 I'm looking at is 237. Now, 0.8 times 237, some of you who are good at maths can get that faster. You can type into the chat box if you guys got that one. 237, 189, okay, 189 is what I'm looking at. In terms of range, it's already done that, 232, okay? From the bottom to here, it's already done that. So those of you captured that, well done. S&P, that's another one, uptrend, phase 1. On here, this is a perfect one that is just setting up at the moment. Again, direction alignment, upper stretch being broken out. This is really good. The only thing I'm aware of is it's stretched out quite a bit from its bottom. Wait for it to retrace before I start to take a position. Those of your breakout traders, you can put your first position here, but maybe at a lower risk. Okay, I'll put that on the our trading view channel. I'll wait for this 15-minute maybe to retrace a little bit and align with the higher time frame, and then a bottom confirmation before I start to take consider this. Okay, so that's on the S&P. Let me just take a look on Brent oil as well. Brent oil is setting up quite good, just that there's no trend over here. Trend alignment is towards, direction alignment is towards the downside on daily. On the 1 hour, let me take a look. Yes, so upper stretch got taken out. It's showing a downtrend, so not really the best of setups because it just took that out. Is that a false breakout? And will that align towards the upside? Not very clear. Let me stay away from that. Let me take a look on the 15 minutes, what it's doing. Still a downtrend, so probably not. I'll stay away from that, giving mixed signals. Silver. Let's take a look at silver at the moment. Silver is also on the downtrend here. Let me see. Over here, it's taken out the lower stretch, right? It's probably done its range as well. Let me take a look at that. So, in terms of ATR range, this one is 56 cents. Yeah, it's done its range towards the downside. There was trend alignment when it took out that low and it took out that lower stretch. That could have been a possible point to enter this and then ride this move, but there was no direction alignment but trend alignment with the higher time frame. That's how you could have traded that. And the last one I'll take a look at because most of you got the idea by now. Apple, this was yesterday, wasn't it? This was before when the markets open. We can start to take a look at that. Yesterday, again, same thing here, right? Upper stretch being taken out by this bar over here on the 15-minute, right? Because it's only trades for a much shorter time window period. So we look at a smaller time frame. So over here is when it got taken out by the upper stretch, confirmation, alignment trend, take it for the range. That's what you would have done over here on the Apple. So use the same principles for today as well. Out of all of this, what would be my best bet? As of now, I would say euro dollar would be my best bet on terms of direction and trend alignment. DAX would have been perfect when you had caught it more earlier in the day. But for now, I would say euro dollar. And the last thing, I would just check that with the volume on euro dollar. And then we will wrap it up and I'll just run a little bit over time over here. On euro dollar, let me take a look. I'll bring up the other one. There we go. Wait for that to load up. And good. So I've got that one there. And on the 1 hour is what I'm taking a look at. Let me do it here. I didn't have time to go through the stats table, but you can take a look at that in the 7 steps CTP. Highly recommend that. So with the volume and everything compiled, let me just hide the stats chart over here at the moment. Right, so what do we have? Great, we got more alignment over here with the volume as well, as you can see. Red dot by the VSA light over here as we are seeing. And then also when I start to take a look on the volume side of things, the newer version, Trade to Win Pro, also starts to show you that over here, around when the confirmation came, there were volume spikes across the higher moving averages of the relative volume. Okay, that's what you're seeing over here. So that's all good. It's all aligning. If I take a look on the 15-minute, and with that we can close up on euro dollar, you can see that there was some high volume spikes, especially happened around here. You just got to be careful if this turns. If this turns, maybe It's a little bit of a retracement before it comes back down to its trend again. A little bit of the volatility, the dance, as we say. So you can stay put with that. If you don't want to enter it straight away, wait for it to retrace first and then come back further down. Okay, those are things you can take a look at. But so far, everything is healthy towards it, as we would say, as Gavin would say as well. When you got a big volume spike, but then the close is about the same price, and then if this starts to close lower, this volume spike is towards the more selling side of things. Okay, that's how we will take a look at that. So everything is aligning. So I would say I'll post this on TradingView on Euro Dollar, and then we'll see how this progresses throughout the day. All right. That's it from me on this session today. Traders, as you all know, most of the times we'll go on Wednesday's live, so you can catch us on this live intraday positions, and then also we go through some topics as well that you can start to learn from us. And also when you subscribe to our channel, every time we interview some top traders and we go live, you can get all that sent to your phone. Okay, all you got to do is hit on the subscribe button and then click on the all bell icon. And another thing, what I would say highly recommend is watch the 7 steps to ctp.com. Once you register for it, then you get the videos just looking like that. Really highly recommend. 15 years of collated research with 38 years of team cumulative experience here at Master the Markets. Traders, that's all from me as for now. Great having this session with you guys. Really, I trust that you enjoyed it. And as we always say, till the next time, stay disciplined, follow your trading plan,